Greetings you all and welcome to the study of Business and Data Analytics. Business and Data Analytics is a newly introduced paper in the CPA syllabus. In our today's lesson, I'm going to do an adumbration of the CRISP DM framework. The CRISP DM framework. Now, learners, the CRISP DM framework is a model that serves as a base for a data science process or project. And CRISP stands for cross, CR stands for cross industry, this is cross industry standard, S stands for standard, all right. CR stands for cross, I stands for industry, S, this S stands for standard, all right. P stands for process, DM stands for data mining, cross industry standard process for data mining. It is a process for data mining. So what is data mining? Data mining is the process of extracting and discovering patterns in large data sets. Data mining is the process of extracting and discovering data patterns in large data sets. All right. So, candidates, the CRISP DM framework, I've said, is a cross-industry standard process for data mining, which is a model that serves as a base for data science. Data science. What is data science? Data science. Now, data science is the field of study that combines domain expertise, programming skills, and knowledge of mathematics and statistics to extract meaningful insights in data, meaningful insights from data. In other words, data science is a process of finding anomalies, finding patterns, finding correlations within larger data sets to predict outcomes. And using a broad range of techniques, you can use such information to increase revenues, to cut costs, to improve customer relationships, to reduce risks, and so on. Data science. And one may ask, what's the distinction between data science and data analytics? Because remember, our subject is data analytics. What's the difference between data science and data analytics? Now, candidates, while Data science focuses on finding meaningful correlations between large data sets. Data analytics, on the other hand, is designed to uncover the specifics of the extracted insights. In other words, data analytics is a branch of data science that focuses on more specific answers to the questions that data science brings forth. So, data analytics is a branch of data science. It's a branch. There are many branches of data science. So data analytics is one of the branches. So learners, in this lesson, I'm just doing an adumbration of the CRISP-DM framework, the cross-industry standard process for data mining. And I've defined data mining as a process of extracting and discovering patterns in large data sets. This CRISP industry standard process for data mining is a process model that serves as the base for a data science process. It's a process. It is what? It is a process. That means there are steps or stages or sequences or phases in the process we are calling cross-industry standard process. Cross-industry standard process. It is a process. And within this process we have sequential phases. Sequential phases in the cross-industry standard process. There are sequential phases. And these are the sequential phases, the phases or the steps, all right? The phases or the steps. It has various steps which include one is business understanding. Business understanding. The second phase is known as data understanding. The third phase is known as the data preparation. Data preparation. Number 4, modeling. Modeling. Number 5, evaluation. Evaluation. And lastly, deployment. Deployment. These are the phases in the cross-industry standard process. 1, business understanding. 2, data understanding. 3, data preparation. 4, modeling. 5, evaluation. 6, deployment. Now I'm going to briefly explain the 6 phases, starting with the business understanding. Business understanding, candidates, involves understanding the business domain, being able to define the problem from the business domain perspective, and finally being able to translate such business problems into data analytics problem. first understand the business. Define the problem from the business perspective. And there are various activities that take place in the process of understanding the business. Then number 2, data understanding. This involves collection of the necessary data and their initial visualization. It involves summarization of data in order to obtain the first insights, particularly and not exclusively about data quality problems. Understand the data. Does the data have any missing outliers? Find ways of understanding the data. And there are various activities that take place here. The third phase is known as data preparation. Data preparation, on the other hand, involves preparing the data set for modeling tool and may include data transformation, feature construction, outlier removal, missing data, may also include incomplete instances removal, and so on. Data preparation. And candidates, there are various activities that take place when preparing data for analytics. Number 4, modeling. Modeling. And typically, there are various methods that can be used to solve the same problem in analytics, often with specific data requirements. And as the first step in modeling, you will have to select the actual modeling technique that you will use. You may choose techniques like decision trees. You may use techniques like neural network, neural network, and so on. Modeling. These are tools, techniques that can be used to solve the problem. Step number 5, evaluation. Evaluation is the next phase. All right? Solving the problem from the data analysis point of view is not the end of the process. It's not the end. When you come with the technique, that's not the end of the process. Why? Because it's necessary to understand how its use is meaningful from the business perspective. In other words, does the solution obtained, does that solution help meet the objective of the business? Because remember, in step number 1, we talked about business understanding, and it may be important, it is important at this step to come up with the objectives of the business. So the tools that are developed here, does the tool help meet the company objective? So that's very important to carry out evaluation. Then lastly, we have deployment phase. Deployment phase is the integration. At this point, we have the integration of the data analytics solution in the business process, which is very critical. The integration of the data analytics solution in the business process, we know, is the main purpose of the deployment phase. And typically, it implies the integration of the obtained solution into a decision support tool. Decision support tool. All right? You integrate the solution into a decision support tool, because we know the purpose of analytics is to extract and discover patterns in the large data sets so that the management can use such information in making informed decisions. So this is the cross-industry standard process for data mining. It is a process, and this process we can, in conclusion, illustrate it in a diagram. Beginning with business understanding. We have business understanding. Business understanding. We've talked about data understanding. Data understanding. There is data preparation. Then we have modeling. Evaluation, and deployment. Business understanding, data understanding, business understanding, data understanding, data preparation, modeling, evaluation, deployment. Can have the arrows. It's a process. This is a process. This is a diagram to illustrate the cross-industry standard process for data mining. And that effectively brings this lesson to an end, where we have done an adumbration of the CRISP-DM framework, which we've said is a process for data mining. We've defined in this lesson data mining. We've defined data science. We've highlighted the distinction between data science and data analytics. Then we have briefly described the 6 phases in the cross-industry standard process for data mining framework. Number 1, business understanding. Number 2, data understanding. Number 3, data preparation. Number 4, modeling. Number 5, evaluation. Number 6, deployment. In closing, we illustrated the CRISP-DM model using a diagram, which you can see is a process that flows from the first phase, which is business understanding. The second phase, data understanding. The third phase, data preparation. The fourth phase, modeling. The fifth phase, evaluation. Then lastly, the deployment phase. So that will mark the end of the lesson. And as it is our tradition, I'm going to give you an assignment. Assignment: define data mining. 2. Using a diagram, describe the CRISP DM framework. Thank you for attending the lesson. I hope to meet you in our next session. Goodbye. Let's now move on to part C. Makazi Limited's current earnings per share is 6 shillings. The firm has in issue 50 million ordinary shares which have a par value of 20 shillings. The firm's total revenue and capital reserves amounts to 500 million shillings. The company has an asset beta of 0.9 and a retention ratio of 60%. The management of Makazi Limited intends to undertake a financial reconstruction which will result in a debt equity change from 0.45 to 0.2. What's the question? Additional information is, number one, the risk-free rate is 8%. The risk-free rate of return is 8%. Number two, expected rate of return of a market portfolio is 18%. Number three, corporate tax is 30%. Number four, the firm's return on equity before and after the financial reconstruction will remain unchanged. Required, evaluate the impact of the financial reconstruction on the firm's share price. The impact of the financial reconstruction on the firm's share price, 8 marks. 8 marks. So candidates, how do we evaluate the impact of the financial reconstruction on the firm's share price? We'll compute two share prices, one before the reconstruction, then we'll compute the share price after the reconstruction, then we'll do the evaluation. We will check whether the evaluation led to an increase in the share price or led to a reduction in the share price. That is the formula. We calculate the share price before reconstruction and after reconstruction. Then we, all right. So let's now begin. I'm going to first calculate. So candidates, we are going to calculate the value of a share. This is C. We'll calculate the value of a share before reconstruction. Is it reconstruction? Yes, before financial reconstruction. And we know, candidates, the value of a share P naught is equal to D naught 1 plus G over cost of equity of levered firm minus G. So this is the formula for calculating the value of a share before reconstruction. Then we'll calculate the value of the share after reconstruction. Then we compare the two and see the effect of reconstruction on the value of a share. So do we have these values in the question? No, we do not have these values. We need to work out these values beginning with dividend per share. D naught is dividend per share. G is the growth rate. We don't have the growth rate. The cost of equity for the levered firm, we do not have it. We will have to work it out. So let's work out those variables, the inputs. Let's begin with the dividend per share, D naught is equal to, we will use the information given to calculate D naught. In this question we are told that Makazi current earnings per share is 6 shillings. The firm has in issue 50 million ordinary shares which have a par value of 20 shillings. The firm's total revenue and capital reserves amounts to that. Then the company has a asset beta of 0.9 and a retention ratio of 60%. So dividend per share will be equal to the payout ratio times the EPS. Payout ratio times the EPS. In this question, we have the retention ratio is 60%. Retention ratio. If the retention ratio is 60%, then the payout ratio is 40%. That is 100% minus 60%, giving us 40%. The EPS is 6 shillings. Therefore, the dividend per share is equal to 40% of 6. 40% times 6 is 2.4 shillings. 2.4 shillings. So candidates, here we have the D naught, which is equal to 2.4. Then we are going to work out the growth rate. The growth rate. G, candidates, using the Gordon's growth model, we know that growth rate is equal to the retention or return on equity times the retention ratio. Return on equity times the retention ratio will give us the growth rate. And the retention on equity, candidates, the retention on equity is equal to the net income divided by equity. Net income divided by equity. The net income. What is the net income? We read that the firm has in issue 50 million ordinary shares with a par value of 20 shillings each. 20 shillings each. Then we read that the firm's total revenue and capital reserves amount to 500 million. 500 million. So we have equity there, candidates, of equity there is 50 million ordinary shares. 50 million ordinary shares. So we'll have 50 million ordinary shares times the par value of the shares is, the par value there is 20 shillings. That is ordinary shares or ordinary share capital, plus the total revenue and capital reserves of 500 million plus 500 million shillings. 500 million shillings. So we need to determine the net income. The net income, candidates, is just the earnings. We read that in the first sentence that the Makazi Limited's current earnings per share is 6 shillings. Earnings per share is 6 shillings. That is the earnings. Earnings 6 shillings per share. So 6 shillings times number of shares, the number of shares 50 million. Okay? This is 50 million. That will give the return on equity. So we have this is 50 times 6 300, that is the net income, we are going to divide 50, this is 50 times 50 million times 20 plus 500, it's 1,500, that will be equal to 300 divide 1,500, 0.2. So 0.2 is the return on equity. Return on equity. So we have the return on equity here, 0.2. We multiply by the retention ratio. The retention ratio, if the payout ratio is 40%, the retention ratio we are given in the question is 60%. Therefore, the growth rate will be 0.2 times 60, which is equal to 12%. 12% is the growth rate. The growth rate here is 12%. So we have 1 plus 0.12 divide by the cost of equity of the levered farm. Cost of equity of levered farm. How do we calculate the cost of equity of levered farm? Cost of equity of a levered farm. Candidates, using CAPM, the cost of equity of a levered farm is equal to the risk-free rate plus beta, the beta of levered farm into RM minus RF. This is the premium. That gives us the cost of equity of a levered farm. Cost of equity of the levered farm. Now, do we have all the inputs in this formula? Yes, we have the risk-free given. Risk-free is 8%, that is 8. We have beta for the levered farm. Beta of the levered farm, you are given some beta somewhere. We read that the company has a beta of 0.9. 0.9. But candidates, that is the beta of this farm, which is unlevered. Okay, this beta given here is the unlevered beta, beta for the levered farm. But here, candidates, this is beta for the levered farm. This one is unlevered. The beta given in the question is a beta, the asset beta 0.9 of the unlevered farm. So we need to calculate the beta for the levered farm. So candidates, how do we calculate beta for the unlevered farm? Beta for the levered, this is levered. The one here is the unlevered. So candidates, using the Hamada model, the beta of the levered, because you need the beta for the levered here, the beta of the levered farm is equal to the beta of the unlevered farm into 1 plus D over E, 1 over E, 1 minus T. That is the formula for beta for the levered farm. So we need to calculate this beta so that we can apply it there to calculate, to determine the cost of the levered equity. Cost of equity of the levered farm, and this cost of equity of the levered farm is what we need in determination of the value of the share before reconstruction. Okay, are you following, candidates? Are you following the process? Mathematics, we are working out step by step. First of all, put down the formula. The value of the share before reconstruction is equal to P naught into, which is equal to P naught, which is equal to D naught into 1 plus G over KEL minus G. All these variables were not provided in the question, so we are working out these variables one by one. So far, we've determined the dividend per share, we've calculated the growth rate. We are now working out the cost of equity of a levered farm. Cost of equity of a levered farm, candidates, we've seen that using the CAPM, the cost of equity of a levered farm is equal to the risk-free rate plus beta of a levered farm times the premium. And in calculating the cost of a levered farm using CAPM, we need to determine the beta of a levered farm, which we do not have in the question. So using the Hamada model, we are going to work out the beta of the levered farm, which is equal to the beta of the levered farm into 1 plus D over E times 1 minus T, which is equal to the beta of the unlevered is what we have in this question, 0.9 into 1 plus D over E. This is a ratio which we also have in this question, the debt equity ratio. We read that the management of Makazi Limited intends to undertake a financial reconstruction which will result in a debt equity ratio. A debt equity ratio change from 0.45. That is the debt equity ratio. This is the debt equity ratio, 0.45 times 0.7 times 0.7. That will give us the beta of a levered farm. So I'm going to have 0.45 times 0.7 plus 1 times 0.9. This is equal to 1.1835. This is the beta of the levered farm. So this beta of the levered farm, we are going to write it here, plus 1.1835. Then we multiply the premium, the return minus the risk-free rate. Do you have the return? Do we have it? Yes, we have it. The expected return of market portfolio is 18% minus the risk-free rate 8%. Therefore, candidates, the cost of equity of a levered farm will be equal to 18 minus 8 is just 10 times 1.1835 plus 8. This is equal to 19.835. 19.835%. Therefore, candidates, the value of the share before reconstruction will be equal to 2.4 into 1 plus 0.12 divide by 19.835%. When converted into decimal, this will be equal to 0.19835 minus G minus growth rate 12%. When converted into decimal, 0.12. 0.12. Therefore, candidates, the value of a share, this share will be equal to 2.4 times 1.12 divide by 0.1919835 minus 0.12. This gives me shillings 34.30. That's the value of the share before reconstruction. We will now calculate the value of the share after reconstruction. The value of this share after reconstruction. The value of the share after reconstruction. Then we compare. We're going to compare after calculating the value of the share after reconstruction. We see what is the effect of reconstruction on the share. Effect of reconstruction on the share. So we calculate the value of the share after reconstruction. This is financial reconstruction. The value of a share will be equal to P naught is equal to D naught 1 plus G divided by K E L minus G. So therefore, candidates, the dividend per share will remain 2.4. The growth rate will remain 1 plus 0.12. The cost of equity of the levered fund will change. That's the only thing that will change, and will change because the beta, okay, the beta, we read here that the beta in the third sentence down there, we read that the management of Makazi Limited intends to undertake a financial reconstruction which will result in a debt equity ratio change from 0.45 to 0.2 to 0.2. Now, using Hamada, we will have to Hamada model. We are going to change this 0.45 because it is changing from 0.45 to 0.2. 0.2. So the beta for the levered farm after reconstruction will change to 0.2. So therefore, what will be the beta? The beta is going to be 0.2 times 0.7 times 0.7, which is equal to 0.14 plus 1, which is equal to 1.14 times 0.9 is equal to 1.0226. The beta for the levered farm will change to 1.026. Therefore, candidates, the cost of equity of the levered farm will also change. Using CAPM will also change. Let me just use this place to work out the CAPM. Using CAPM, we are going to change this. Beta will change. That beta will change to 1.026. 0.026. Therefore, this will change under, after reconstruction again, this is going to change 1.026 times 10. This is 1.026 times 10 plus 8. So the new cost of equity of the levered farm is equal to 18.26, 18.26, 18.26, 18.26, 18.26, 18.26. That is the only thing that changes when calculating the value of the share after financial reconstruction. The cost of equity of the levered farm will change to 18.26%. When converted into decimal, this will be 0.1826 minus 0.12. Therefore, the value of a share will be equal to 2.4 times 1.12 divide 0.1826 minus 0.12. This is equal to 42 shillings and 90 cents. 42 shillings and 90 cents. So candidates, we have calculated the value of the share after reconstruction, and we have found out that after reconstruction the value of the share goes up from 34 shillings and 30 cents to 42 shillings and 90 cents. 42 shillings and 90 cents. That is the effect. The question was, evaluate the impact of the financial reconstruction on the value of share price. The share price has gone up from 34 shillings and 30 cents to 42 shillings and 90 cents. That is 8 marks. 8 marks. 8 marks. 8 marks. Candidates, 8 marks. You get also marks for all these workings. Okay? Workings. These inputs were not provided in the question. The candidate, that's why I always tell you, before you answer any question, put down the formula. It is this formula that guides you on how to earn the marks. Because out of this formula we saw from the question that none of these inputs were provided in the formula. So a candidate getting marks, you don't have to score all the marks, but you can at least score some marks. Out of these 8 marks, you can score some marks because by now you know how to calculate the dividend per share. There are many ways in which the DPS can be calculated, and that depends on the information provided in the question. We know dividend per share can be the total earnings attributable to shareholders divided by the number of shares. Sometimes you can be given the payout ratio and the PEPS so that you can determine the D naught. So if calculating D naught, you get a mark. You may not remember the Hamada model, but you can at least get the marks for the DPS. You can at least get marks for growth rate. These are concepts we learned in section 3. You can score some marks for growth rate. Okay, you can score marks for even just putting down this formula. You can earn some marks. So out of these 8 marks, you don't have to score all the marks to pass your exams. You can raise easily 8 marks easily from this question that looks a bit technical. So at least candidates, these are questions that are repeated. If you check question number 4, this question that we have answered is similar to the question we answered in November 2019, where candidates were expected to calculate the exchange ratio, maximum payable price, which requires you to remember the exchange ratio. So as you prepare for your exams, please make sure you memorize the formula. Memorize formula. Then you will be in the right direction in passing your exam. So thank you for attending our today's revision session. In our next session, we are going to answer the last question that was tested in May 2021. We've done question 1 up to question 4. Next time I appear here, I'll tackle question number 5, and I can see question 5 is also a very interesting question. It is a question that required candidates Roman A, and that is part A, to discuss for circumstances in which a decision could be made to liquidate a failing company rather than attempt to carry out reconstruction. Part B, examine for advantages of investing in real estate. You can see, candidates, these are marks that required common sense. What are the advantages of investing in real estate? Then part C, candidates were required to construct a decision tree to depict payoffs and hence determine the expected net present value of a project. There is information given there regarding a project by a company Z-Tech Limited, which wishes to design a new product so as to catch the interest of their largest market, which is currently very competitive. Part 2 of C required candidates to calculate the project's expected standard deviation and coefficient of variation. These are common questions. So make sure you keep revising, and as you revise, avoid just looking at the answers in the books or just watching these videos the way you watch movies. Make sure sometimes you sit down with a complete sitting. Take, for example, May 2021 sitting, do the whole 5 questions in 3 hours, then you can go back and check if your answers are correct. Continue practicing what we call active recall, and you'll have a very easy time in tackling examination questions. Thank you. God bless you. Bye-bye. Greetings, candidates, and welcome to the revision of the financial accounting paper that was done in May 2021. In our today's session, I'm going to answer question number 2, which is in 2 parts, A and B. First of all, we are going to answer part A, and I read, Alice Kibibi's accountant has prepared her trial balance, which did not balance, as follows. We have the debit column and the credit column. Then there are, the first item there is returns inward and returns outward. Number 2, there is a capital, sales, purchases, drawings, rent and rates, motor vehicles, discounts allowed and discount received, accounts receivable and accounts payable. Candidates, you can see there the total debit is 84,420. The total credit is 5 million. Additional information number 1, a credit note for 2,850,000 was entered in the account of customer P Toro, but no entry was made in the returns account. Number 2, the sales accountant was overcast by 4.8 million. Number 3, 2,970,000 shillings of goods withdrawn for Alice Kibibi's personal use was entered into the drawings account, but no other entry were made. No other entries were made. Number 4, a discount allowed of 2,520,000 was credited in error to the discounts received account. Number 5, cash sales of 19,780,000 had not been entered in the sales account. Number 6, a bad debt of 6.3 million had been entered in the account in the customer's account, but not in any other account. Number 7, the purchases account had been undercast by 2,650,000 shillings. Required, Roman 1, journal entries to enter the above errors. Narrations are not required, 7 marks. Number 2, suspense account duly balanced, 3 marks. So first of all, candidates, we're going to prepare the journal, the general journal part A, journal entries to correct the above errors. Candidates, errors are corrected through the general journal. Okay, that is what we are going to do. We are going to make the corrections via the general journal. This is the debit side, the credit side. The amounts are in thousands. On this side, we have the particulars. That is the format of a general journal. We are going to make the correction. Number 1, a credit note for 2,850,000 was entered in the accounts of P, but no entry was made in the returns account. That is the error. It's an error of single entry. So we read that it was entered in customer P Toro account. P Toro account. This is a return account of a customer. That means this is a debtor. Candidates, this one is a debtor. P Toro is a debtor, a customer. There was a credit note of which was entered in this account. That means this account was credited. This account was credited with the returns. These are returns. This is a return because it's a debtor. A debtor, where the credit note is used to correct an overcharge. This debtor was overcharged. So to correct that overcharge, a return is to be, we need to credit this account with returns inward. This is a return inward. The return inward here is 2.850,000. So this is the entry that was made, but there was no corresponding double entry in the return inward account. Double entry. If this account is credited, then this account ought to be debited. Ought to have been debited. Ought to have been debited. There was that omission. So candidates, to correct that error, you can see we need to debit the return. This is returns inward, 2,850,000. So when we debit this account, then the question is which other account, which is the corresponding credit entry? The corresponding credit entry should be made in the suspense account. Suspense account. So this account is debited, suspense account will be credited with return inward. Return inward of 2,850,000. So we will credit the suspense account. Suspense account is credited 2,850,000. That is the correction. No narrations were required. Close it. Error number 2. The sales account was overcast by 4.8 million. The sales account was done what? Was overcast. Sales account. Sales account. When sales are made, candidates, increase in sales, what happens? The sales account is always credited. When there is an increase in sales, you credit the sales account. So we are told that the figure in sales account was overcast by 4.8 million. So to correct the excess in the account here, we will debit the sales account 4.8 million. We debit because there is an increase of 4.8 in this balance. So we are going to debit so as to decrease. All right. So if you are debiting this account, then candidates, the corresponding, because this is debited, the corresponding credit entry will be made in the suspense account. Suspense account. So this account is debited. So we write here suspense. Now, the corresponding credit entry, we credit suspense account 4.8 million. So we write here sales. So which account here is debited? Sales account is debited. So we write here sales account debited 4.8 million. Which account is credited? Credit suspense account. Suspense account 4.8 million. 4.8 million. This is 4.8 million. So no narrations were required. Close. We are going to correct the third error, which is 2,970,000 shillings of 2,970,000 shillings of goods withdrawn for Alice Kibibi's personal use was entered in the drawings account, but no other entries were made. No other entries were made. Okay? All right? Was entered in the drawings account. In the drawings account. Candidates, when goods are withdrawn for personal use, we know that the drawings account is affected. The cost of sales account is also affected. So when goods are withdrawn for personal use, we debit the drawings account, and we read that were entered in the drawings account. That means this account was debited. 2970 was debited. So if you debit this account, that means that the cost of sales account should be credited with 2970. So this account is credited. In correcting candidates, we credit the cost of sales account because it was not credited. The corresponding entry will be suspense account, suspense account, if this one is credited, suspense account should be debited 2970. 2970. So we have suspense account debited 2970. Cost of sales account credited 2970. Close. All right, then we move on to the next error. Error number 4. A discount allowed of 2,520,000 was credited in error to the discount received account. Candidates, you can see here we have the discount received account. Then we have seen there is the discount allowed account. So what was the error? 2,520,000 was credited in error to the discount received account. Was credited here in error to 2520. All right, was credited in error. So we first need to remove this amount from the discount received account, and that will be done through the suspense account. So there is this third account, suspense account. So we are going to debit the discounts received 2520 to remove this error. The corresponding entry will be to credit the suspense account. This is discount received 2520. So that is the first aspect. Then the amount ought to have been debited because, candidates, the discount allowed is an expense. This amount ought to have been debited in this account. So we can now go ahead and make the right entry. We debit this account 2520. All right, 2520. We debit this account. The narration here is suspense. So debit discount allowed in suspense account, then corresponding entry, credit this suspense account with discount allowed 2520. That is how you make the entries in the ledgers. So we can come here and journalize this correction. You can see, candidates, that discount received is debited. So I write here discount received account debited 2520. Discount allowed is also debited. Discount allowed account is debited 2520. Suspense account is credited with the these two, we get the total. This is 50 40. That is how we go about that correction. Number 4. Correction number 5, the error is cash sales of 19,780,000 had not been entered in the sales account. Cash sales. So candidates, we have cash account and sales account. That transaction, the two accounts that are affected by that transaction is cash account and sales account. So what was the error? The error is that cash sales had not been entered in the sales account. That tells you that the part that affects the cash account has no problem. The only problem is in the sales account. It had not been entered in the sales account. So when correcting that error, what are you supposed to do? If the sales account was not entered, then you enter it. The amount is 19 19,780. 19,780. So the cash account has no problem. The cash account has no problem. So we effect this error through suspense. Suspense. So if sales account is credited with suspense, then suspense account will be debited with sales. 19,780. 19,780. So candidates, you see the suspense account is debited 19,780. Sales account we credit 19,780. 19,780. We are moving on well, candidates, step by step. We are doing this thing step by step. If you attended our class lessons, we are revising what we had covered. We are moving on to error number 6, which reads, a bad debt of 6.3 million had been entered in the customer's account, but not in any other account. Was entered in the customer's account, but not in any other account. So this is a bad debt. Bad debt account. Okay? Had been entered in the customer's account. So the customer's account is okay. And the customer here is debtor. When we have a bad debt, candidates, we credit the customer's account and debit the bad debt account. Okay? Bad debt account. So this bad debt account ought to have been debited with 6.3 million. Now, since the customer's account has no problem, or the entry was made in that account, the account that we'll use to correct this error is just the suspense account. The suspense account. So what do? We are going to debit the bad debt account and credit the suspense account. So we write here bad debt, then write here suspense. So bad debt is debited, debit, bad debt, 6.3 million, credit suspense 6.3 million, close. Then number 7, the purchases account had been undercast. The purchases account had been undercast. The purchases account had been undercast. Purchases account, so we have purchases account has a problem. There's an error in that account. Now, anytime we make purchases, any increase in purchases, candidates, we debit the purchases account. So the total amount in the purchase account is in excess, is less. Undercast means less. The amount is less by 2,650,000. If it is less, then we are going to debit, to add 2,650,000. So we debit the purchases account and credit suspense account, and credit the suspense account. So this account is credited 2650 with purchases. This one is debited with suspense. So we are going to do what? Debit purchases account with 2650, then credit suspense 2650. These are the only errors that were discovered, and that is the solution to part 1, which required the journal entries. Then in part 2, you're going to have the suspense account duly balanced. Duly balanced. That tells you there is a balance on this suspense account, and that balance should be obtained from the trial balance. We read that Alice Kibibi's accountant has prepared her trial balance, which did not balance. And candidates, in this question, the examiner did not indicate the suspense account in the trial balance. The examiner simply gave the totals, which were not in agreement. You can see the debit total is 84,420,000. The total credit is 83,310,000. You can see the debit exceeds the credits by 1,110,000. That is the difference, and that difference should be written on the credit side, so that ought to have been written. This 1,110,000 ought to have been written in the trial balance, on the credit side. Okay, that ought to have been included. Let me have it down, candidates, just to help you understand what I'm saying. We have debit and credit in that question, and you can see that the totals on the debit 84,420. The total on the credit is 83,310. 83,310. These are the totals, and they are not in agreement. The examiner did not indicate where the suspense account was to be written in the trial balance. Now, what I'm saying is, ideally, candidates, this suspense account ought to have been written on this side. Suspense account 110. Okay, 1,110,000, because 84,420,000 minus 83,310,000 is equal to 1,110,000. So this ought to have been the position of the suspense account, so that after adding this side and this side, then the balancing figure is the suspense account, and you can see it appears on the credit side. So the double entry, this account, so candidates, this balancing figure, which is on the credit side of the trial balance, should be indicated on the credit side of the suspense account. So you have balance brought down 000 of 1,110,000. This is the first item on the suspense account. The question says suspense account duly balanced. So we need to effect these changes from the journal in the suspense account so that we clear this balance. We use suspense account, candidates, to balance the trial balance. If there is any errors in the preparation of journals and ledgers, then while preparing the trial balance may not agree if there are errors in the ledgers, as you have seen in this case. So it is an accounting practice to use the suspense account to balance off the trial balance. Then investigations must be carried out to find out why the trial balance is not in agreement, because ideally, under the double entry system of accounting, when errors are not committed, the total debits should equal the total credits. In this case, that did not happen. So there are errors that were discovered later after investigations. These errors were effected or corrected through the general journal. Then we are going to we are going to transfer these transactions that affect the suspense account. We are going to check from the general journal the errors that affect the suspense account. Then we will check if this balance will clear. So let's begin with the first error. You can see the first error returns inwards suspense account. You can see suspense account ought to be this suspense account candidates. You can see here it is credited. Okay, suspense account is done what? Is credited. So then candidates, the suspense account should be credited, because here you see it says credit suspense account. So we are going to credit the suspense account. The narration is returns inward. So returns inward, returns inward. That is 2850. The second error, candidates, also affected the suspense account. Suspense account is credited with, we are going to credit suspense account with sales 4.8 million. The next error, we can see suspense account is debited with cost of sales. Suspense account is debited. We are going to debit suspense account with cost of sales. The amount is 2970. Moving on to the next error, you can see suspense account is credited, okay, with discount received, discount received, discount allowed, 25. This is 2520, 2520, 2520. The next error, suspense account is debited with sales. Debit this account with sales of 19,780. 19,780. The next error, bad debts, suspense account is credited 63. Suspense account credited, bad debt, bad debt 63. This is 2520, 6300. The last error, purchases. You can see suspense account is credited with purchases, purchases 2650, 2650. So we are going to get the total on the credit side, get the total on the debit side, and see if the the suspense account will be in agreement. 27, 29, this is 29. I'm adding the debits first. 2970 plus 19,780. 22,750. Total credits 111, 2850, 48 plus 2520 plus 2520 plus 63 plus 2650. 22,750. So candidates, you can see we have the suspense account is duly balanced. Duly balanced. How many marks? 3 marks. 3 marks. 1, 2, 3, 4, 5, 6, 7, 8, 9. That means every entry is just a third a mark. A third a mark, 3 marks. For every entry you earn a third of a mark. Then part 1, 7 marks. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15. Almost just half a mark. This one is 1 mark. These are half a mark, 12 marks. 12 marks. So we answered part A. Then part B, I read, the following details relates to the machines owned by Ujenzi contractors. Machine A, machine B, machine C, machine D, machine E. We are given the cost of each machine and the date of purchase of each machine. Ujenzi contractors' depreciation policy is as follows. Number 1, machine A and B are depreciated on a straight line basis with no scrap value over 10 years. Number 2, machine C is depreciated on a reducing balance basis at 20% per annum with a scrap value of 5 million shillings. Number 3, machine D and E are depreciated on straight line basis over 5 years with a scrap value equal to 10% of the original cost. Number 4, a full year's depreciation for each machine is provided in the year of purchase. Required. A property, plant and equipment schedule from 1st January 2011 to 31st December 2020 with the following details. Number 1 is the date of purchase. Number 2, cost. Number 3, annual depreciation. Number 4, accumulated depreciation. Number 5, net book value. Total 10 marks. 10 marks.
Welcome to Manifested Publishers.
Hello students, welcome to Manifested Online Classes. My name is Joseph Kemani. I want us to continue with the revision for financial reporting, and I want us to look on the paper for November 2019. Specifically in this class, I want us to look on question number 3, and that question had 2 parts. One, or part A, it was a theory with 10 marks, and then there was part B, from the topic of insurance. So we start with part A, and it reads, International Financial Reporting Standards IFRS 15, revenue from contract with customers, specify how entities, how and when entities will recognize revenue. The standard provide a single principle based on 5-step model to be applied to all contract with customers. So the question was, describe the 5-step model as specified in IFRS 15. So basically the question here was asking about the 5 steps now to be followed by an entity whenever now an entity is to recognize the revenue from contract with customers. So let's summarize those particular steps there. Remember, in our case, we are doing the revision. This is the paper for November 2019, and this is a question 3. So we start with the part A. Part A, we are required to describe the 5-step model for recognizing revenue from a contract with customers with customers. Now, the first thing which is important here to remember is that this particular standard here, that is IFRS 15, it was issued to replace another standard, that is IAS 18, and basically this particular standard here prescribes the principles for recognizing the revenue from a contract with the various customers. And therefore, this particular standard here, other than giving now the principles for recognizing that particular revenue, it has actually given 5 steps, basically which must be followed by an entity for an entity to recognize revenue from contract with customers. And that's what the question was asking. So step number 1, for an entity to recognize a revenue is basically to identify contract or basically contract with the customers with the customers. So means that the first step which an entity, or basically the first thing which an entity will need to do for it now to recognize the revenue from a contract with a customer, or basically customers, is to identify a contract, or basically contract which have been entered with customers. And basically in this case, according to IFRS 15, for a contract to exist, that is a contract with a customer to exist, there are those particular conditions which need to be fulfilled. One is that that particular contract need to be approved, approved by all the parties, So that means, if, for example, maybe an entity is to supply some goods, or maybe an entity is to provide some services, that contract need to be approved by the business itself, and basically the customer who is to be supplied with those particular goods, or basically to be provided with those particular goods, services. Two is that that particular contract should have commercial. It should have a commercial substance. So basically what this means is that this particular contract, or in this contract between the business entity and the customer, there must be some amount of money which is actually exchanging. So that means that the business should actually supply the goods or provide the services, and then by the end of the day, the business should actually receive some cash. So in that case, we say that there is some commercial substance. Number three is that the payment terms, and the payment terms also need to be identified. Also need to be identified. So basically, when we talk about the payment terms, so we are talking of how now the goods, or basically services to be supplied, or basically to be provided, will be paid for, and basically when the payment should be made. So therefore, if at all now all those particular conditions exist, then in such a case we say that a contract exists between now the business and basically a customer. So therefore, the first step here is to identify that particular contract, or basically contract with customers. Now step number two, according to this particular standard here, is basically to identify the performance obligation, obligation. Now, in our case here, when talk about what we refer as the performance obligation, we are talking of what is expected from the business in that particular contract. Usually, in a contract between a business entity and a customer, the obligation, or what the business is supposed to do, is to supply the goods, or basically to provide what? The services. So therefore, in this particular step number two, the business should be able to identify the services, or the goods, the services, or the goods to be provided, that is in case of services, or in case of goods, those goods which are to be supplied. So that is the performance obligation, or basically that is the obligation of the business in that particular good contract. That is the step number two. Step number three, we have step three. Step three, that was step two. Step three is basically to determine, a business should be able to determine the transaction price, transaction price. Now, in our case, when we talk about the transaction price, we are talking of the amount of money a business expects to receive as a result of supplying some goods, or basically as a result of supplying some goods, services. So therefore, in this case, when we talk about now the transaction price, we are talking of the amount of money the business expect to receive as a result of performing, as a result of performing its contractual obligation, obligation. And then from there we have step number 4. Step number 4 is allocation of the transaction price, allocation of the transaction price to the performance obligation, to the performance obligation. So basically what this particular step entails is that this particular amount of money which is to be received by the business, it should actually be allocated to the performance obligation. What that means is that if, for example, maybe a business is supposed maybe to receive an amount of like 50 million, and maybe assume that this particular 50 million will be received as a result of maybe services which will be provided maybe in year 1, services which will be provided in year 1, year 2, and also in year 3. Now this particular amount here of 50 million then should be allocated to the services which are to be provided in year 1, in year 2, and also in year 3, because what you need to note is that this particular amount of 50 million should not be, for example, be recognized as a revenue in year 1, but rather it should be spread in those 3 years based on when the services are to be provided. That's why we are saying in step number 3, the business will need now to allocate that particular transaction price to the performance obligation. And then finally, step number 5, because we have said this single 5-step model entails, or basically do have 5 steps. Step number 5 entails recognizing the revenue, when the entity satisfies the performance obligation, the performance obligation. So what that means is that in this particular step number 5, for the revenue now to be recognized, it will only be recognized when the entity satisfies now the performance obligation. So basically what that means is using this particular example which I've given here, I've said that if there is a contract between now a business and a customer, and that contract the business expect to receive an amount of 50 million, and that 50 million will be received in respect to services which will be provided in year 1, year 2, and also in year 3, for the revenue which will be received in year 1 to be recognized in the books of account, then the business should provide the services, should provide those particular services. So that's why we are saying the revenue will only be recognized when the entity satisfy the performance obligation, or basically when the entity has actually provided the services. So therefore, according to this particular standard, that is IFRS 15, for an entity now to recognize revenue from a contract with the customers, then those are basically the 5 steps which need to be followed. So basically, that's what was required in that particular part A of that question, which was having 10 marks. So for each step there, you are supposed to get 2 marks. And let's move to the other question, part B, which of insurance, a simple question, which was requiring the preparation of revenue accounts for both marine and also the fire insurance. So in that question, or the question reads, the following trial balance was extracted from the books of Maveo Insurance Company Limited as at 30th September 2019. So in that case, we are given some information in that trial balance. We have the property, plant and equipment. We have a depreciation on a current asset, investment in government bonds and other securities, gross premium received from agent, gross premium received from brokers, gross premium received from direct clients. We have reinsurance premium accepted, reinsurance premium ceded. We have salary bank directors fee, audit fee, and earned premium as at the start of the year. And then we also have claims outstanding at the start of the year. We have the claims which were paid, legal cost in respect to its insurance business. And then we have the salary expenses on marine claims, budget management expenses, trade payables, investment income, ordinary share capital, retained earnings, and then we have premiums which were outstanding. And then we have some additional information. One, we are told premiums outstanding at the end of the year amounted to 1.97 million and 1.2 million for marine and insurance, respectively. Two, we are told claims outstanding, that is initiated and outstanding at the end of the year amounted to 750 for marine and 480 for fire insurance. And then an earned premium at the end of the year is to be maintained as 10% and 50% of the premium received for marine and also the fire. And we are told number 4, the tax rate is 30%. So what the question was requiring there is the preparation of revenue account for both marine and fire, and also the statement of financial position. So basically this was a simple question whereby the examiner was requiring the preparation of the revenue account for both the fire and also the marine insurance business. So we can do away with that. So let's have the title here. So the name of this question 3B. So the name of the insurance company is Maveo Insurance Company Limited, and we are required to prepare the revenue account. The revenue account basically both for marine and fire, and these for the year is for the year which ended 30th September 2019. So in our case, we need to have for each insurance business, we need to have 2 columns. So we can have marine first of all, and then that is marine insurance, and also we have fire insurance. So for each we have 2 columns, and our figures are given in thousands of shillings. Yes. So when preparing this particular revenue account, the first thing we start by computing is basically the premium which was received from brokers, from agent, and also directly from the current. So therefore, the first thing we are going to have here is basically the gross premium which was received. Gross premium received. Premium received, and this premium is usually received, it can be received from agents, and basically we have that. We have the premium which were received from brokers. We have the premium which was received directly from the client, that is direct clients. Direct client. So let's have that here. So the gross premium which was received from the agents in respect to marine was 3,000. In respect to fire, it was 2,500. The premium received from brokers for marine was 1,000 or 1,500. For fire, it was 600. Premium received from directly from the client. For marine, it was 500, and then for fire, it was 1,000. Yes, it was 1,000. So first of all, we need to add that so that we get the total premium which was received during the current financial year from agent, brokers, and also directly from the current. So we can add these, and these will give us 5,000. That will give us 5,000. Okay, let's just add that so that we have accurate figures. So we have 2,500 plus 600 plus 1,000. That will give us 41. Yes, that will give us 41. Yes, so that is the premium received. And then in respect to this, what we need to do is basically to add the reinsurance, which was accepted. Still, this is a form of an income. So for marine, it was 600, and then for fire, it was 0. And then to this, we are supposed to offset something known as the reinsurance, reinsurance seeded. Seeded for marine, it was 700. 700. So, yes, 700. And then for fire, it was 300. Yes, it was 300. So we get the net amount there. So first of all, we are going to have 41 minus 300. That will give us 38. 38. And then 5,000 plus 600 minus 700. So that will give us 49. And basically this one, we refer to it as the net premium. We refer to it as the net premium received. Net premium received. So once we have computed that net premium which was received, we are still supposed to adjust this with the premium which was unearned both at the start of the year and also at the end of the year. So the first thing we add here is the unearned premium, unearned premium at the start of the year, at the start. Basically, the start of this year is 1st October 2018, and then to this we less the unearned premium at the end of the year, at the end of the year. So the unearned premium at the start of the year, that is given in the trial balance, and for marine it was 48. It was 48, so that we are supposed to add it. And then for fire it was 25. It was 25. And then for the unearned premium at the end of the year, we are given that in note number 3, and basically you're told the unearned premium is maintained at 100% and 50% of the premium received for marine and also fire. So basically in our case, we are told that this unearned premium at the end of the year will be maintained as 100% of the premium which were received. In our case, we have the premium which was received here, which is 49. So therefore, what we need to do is basically to get 100% of 49, which will give us 49. So we less it. And then in this case, we are told for fire, it will be maintained as 50%. So 50% of that, 38, should be a half. And that will give us 19. It will give us 19. So basically we adjust those two items so that now whatever you're going to get here will be the net premium earned, the net premium earned, or basically now this is the premium which relates now to the current financial year, net premium earned. So this will give us 48, because that and that will cancel. And then for fire, we have 38 plus 25 minus 19. Yes, that will give us 44. 4,400. So once now we have the net premium received, basically you have said that this is equivalent now to the premium for the year. So what we need to do is basically to proceed and realize what the expenses relating to its insurance business. So therefore we need to proceed and realize expenses. We less the expenses, and basically the expenses which we deduct here in the revenue account are the expenses relating to specifically to its insurance business. Now in our case we have that in the trial balance. So I think the first item which you are given are or is the information about claims. So we can have first of all the claims. Let's start with the claims which were paid, because these claims which were paid will be adjusted. The claims which were paid for marine was, so we can have that now in our first paragraph here, was 2770, and for fire it was 21. It was 21. Now these particular claims, we need to adjust them because there are claims which are not being paid at the start, and also those which are not being paid at the end. Now those claims which are not being paid at the end of the year, because now they relate to the current financial year, what we need to do is basically to add them here. And those claims which are not being paid at the start of the year, definitely they were paid in the course of the year, so they are included here. And because they don't relate to the current financial year and they relate to the previous year, we are going to deduct them here. So therefore to this one, we add the claims which were outstanding at the end of the year. So and basically we have that in note number note number 2. We are told the claims which were initiated and basically which were outstanding, which are not being paid. For marine it was 750, and then for fire it was 480. So we add them there, and then we less the claims which were outstanding at the start. At the start, we have that in the trial balance, which for marine it was 11. It was 11, and then for fire it was 840. Yes, 840. So basically that's how we arrive at the claims now for the current financial year. So then from there we also have other expenses specifically relating to these two insurance business other than claims. In fact, below claims we have the legal costs. We have the legal costs, so we can have that here. We have the legal costs. So legal cost. So the legal cost for marine it was 280. And then for fire it was 130. It was 130. And then from there we have survey expenses. These only relate to marine. For marine it was 220, and then for fire there was none. Then from there we have bad debts. For marine it was 370, and then for fire it was 320. We have management expenses. For marine it was 450, and then for fire it was 380. It was 380. Yes. So I think those are the expenses specifically relating to the two insurance business. Maybe you can just confirm. In the additional information, we don't have any. Yes, we don't have any. So therefore, what we need to do is basically to get the total here. the total expenses. So let's get the total expenses in our case. So we start with the for marine insurance we have 2770 plus 750 minus 1100 plus 280 plus 220 plus 370 plus 450. Yes, in our case that will give us a total of 3740. And then for 5 we have 2100 plus 480 plus there is minus 840 plus 130 plus 320 plus 380. Yes, that will give us 2570. So those are basically the total expenses, and we can deduct them from our amount here. So for the first case, that is for a marine, we are going to have 48 minus that 740, so which will give us 1060. And then for 5 we have 4400 minus 2570. Yes, that will give us 1830. Now to this there is something else also we are supposed to adjust here, and that is in respect to the premiums which were outstanding, because that was supposed to be here, but we can still include it here. So what we are going to do here first of all is that we add the premiums which were outstanding at the end of the year, and then to this we less the premiums which were outstanding at the start of the year. So in our case, in the premiums which were outstanding at the start of the year for marine, it was that is in the trial balance, that is 800, and then we have for fire which is 700, and then at the end of the day I think we have that in note number 1, so we have 1970, and then we have for fire which is 12. So for this one we have said we less, and then this is supposed to be added. So let's get the net amount in our case here. So we have 800 minus okay, these should be the addition, this should be deduction. We get that correct? Yes, so we have 1970 minus 800, so that will give us 1770, that is 1170, and then for fire we have 1200 minus 700, so that will give us 500. So and then we add that, so we get the total plus 1830, which will give us 2330. And then for this one we have 1060 plus 1170, which will give us 2230. So basically what we have here, we can refer to this as a profit for the year, and basically that profit for the year, that ordinarily is supposed now to be transferred to the income statement, because once now an insurance company prepare the revenue account, then from there it is supposed now to prepare now the income statement. So therefore, that particular profit for the year, it will actually be transferred to the income statement. So basically that's what was required in Roman 1. And then in Roman 2, we are required to prepare the statement of financial position. So before we can prepare the statement of financial position, which is a little bit simple, let first of all we quickly prepare the income statement, so that now we get the profit for the year for the company now, not for the insurance business specifically, so that now we get the retained profit for the year. So we prepare the income statement very fast, and basically I've said this is not for specific insurance business, but rather it is for the whole company. So to prepare this income statement, always we start with the profit from both one, the marine insurance, and two, from the fire insurance. So in our case, we already have that here. So the profit from marine, it was 2230. From fire, it was 2330. Now to this, what we are supposed to do is basically to check whether we have any other income. And I think in our case, if we go back to the trial balance, we have only one income, and that is investment income. So investment income. So the investment income, which is I think the fourth item from below there, is an amount of 280. So we add it there. Whatever you're going to get here will be now the total income. The total income for this particular insurance company. So let's get the total income. We have 2230 plus 2330 plus 280. So the total income is 4840, and basically now to this we are supposed to deduct the general expenses, not expenses relating to the specific insurance business, but basically these are general, usually general administrative expenses. So I think we have those particular expenses below where we have salary receivables. In that case, first of all, we have directors' fees. Directors' fees, which is 495, and then below that we have audit fee. Audit fees, which is 240, and then we also have another general expense there above. Yes, the second item, we have a depreciation on non-current assets. Depreciation on non-current asset is 905. So we get the total expenses in our case, so that we get the profit before tax. So we have 495 plus 240 plus 905. So that will give us 1640. We less it from minus 4840. We have 32. So in our case, this is a profit before tax. So once we have the profit before tax, if we go to note number 4, we are told the tax applicable is 30%. So what that means is that to this profit there, we need to less a tax. So we less the tax expense. The tax expense, of which now the tax expense will be 30% of the profit before tax of 32 times 0.3, which will give us 960. So 960, we deduct it from this amount, plus we deduct it from 32, and whatever you're going to get here will be the profit for the year. The profit for the year, or basically in other terms, we can refer to that as the retained profit for the year, which is 240. So basically this amount, we are going to take it now to the statement of financial position. Basically, we are going to add it to the retained earnings at the start of the year, so that we get the retained earnings to be transferred to the statement of financial position. Then finally, in Roman 2 of that question, because what you have just done here, this was Roman 1. So Roman 2, we are required to prepare the statement of our financial position. So we have the title, Maweo Insurance Company Limited, statement of financial position as at 30th September 2019. So basically this was a simple one because these are like 3 marks. So we start with the non-current assets. So we should have 2 columns here. Remember our figures are in thousands of shillings. So the first item in the trial balance is the property, plant and equipment, that is PPE. And PPE, we are given that we are given the amount there is 10,500. Now that 10,500 is basically the net book value, because what you need to note is that if at all depreciation is actually given as an on the debit side of the trial balance, that depreciation has already been deducted in that figure of 10,500. So that 10,500 is already the net book value. So don't deduct depreciation again because it has already been deducted. So then below that we have investment in government sorry, that is investment in government boards and other securities, which is 905. Sorry, that is not 905, rather it is 1400. It is 1400. Yes, so I think those are the only non-current assets. So let's get the total. So the total price 1400, which will give us 11,900, and then to this now we add the current assets. So for current assets, I think we have a number of them. Maybe first of all we can check where we have the additional information. In the additional information number 1, we have the premiums, which now the client had not paid at the end of the year. So the premiums which are outstanding or which had not been paid by the various clients at the end of the year to an insurance company, these are current assets, or these are assets. Yes, so we get the total for both marine and also fire. So we have 1970 plus 1200. That will give us 3170. So what else do we have in the additional information? In the additional information, we don't have any other current assets. So we go back to the trial balance. I think in the trial balance, starting from where we have salary receivables, which is an amount of 750. Below that we have bank balance. Bank balance is 90. And then we have directors' fees, audit fees, those are expenses. Yes, so in our case, I think those are the only current assets. So we get the total asset here. We have 3170 plus 750 plus 90. So we get 1040 plus 11,900, and we get 15. Yes, those are total assets. So and then from there we so we say finance. So we start with the ordinary share capital and reserves here. So let's start with the ordinary share capital. So basically these are our 3 marks. Ordinary share capital is an amount of how much? That is an amount of 4,000. And then below that we have retained earnings. Now for the retained earnings, we should take that retained earnings at the start of the year, which was 450. and then we add this profit which was retained during the current year, 2240, we get the total. So we have 450 plus 2240, that will give us 2690. And I think in our case those are the only two components of equity. So we add the 2 plus 4000, which will give us 6690. So then from there we proceed and we record the liabilities now. So we start with the non-current liabilities. Non-current liabilities. Now for the non-current liabilities, basically we have two items which are supposed to be recognized as non-current liabilities. One of it is what we refer to as the unearned premium. Unearned premium. And basically this is at the end of the year. The unearned premium at the end of the year, I think we computed that here at the end of the year, which was 49 plus 19. So we have 49 plus 19. So this will give us 6,800. And still the claims outstanding, because it may take the insurance company more than one financial year to settle some of these claims. So we have that in note 2. We have 750 plus 480. So we get that total. Get the total here. So we have 750 plus 480. We have 1230. Yes, so those are basically the two components of non-current liabilities. And finally we have current liabilities. So for current liabilities, I think we have still a number of them. What do we have? Yes, so going back to the trade balance, first of all we have the trade payables. Trade payables, which was 230. Trade payables, and 2, we also have this corporate tax. This tax had not been paid for; it was only provided. So we also have corporate tax. We can just refer to it as the current tax. The current tax in our case is 960. 960. Yes, I think those are the only current liabilities. We can just confirm whether we have any other. No, I don't think we have any other. So we get the total current liabilities. We have 230 plus 960, which will give us 1190. So we add all this, from where we have the total equity. So we have a total equity 6690 plus 6800 plus 1230 plus 1190. Sorry, we take that again. 6690 plus 6800 plus 1230 plus 1190. Yes, it's giving us 15,910, and basically these are total. Is the total capital and liabilities. Total capital and liabilities, basically we should be the same with the total asset. Yes, so that essentially what was required in that particular question there, which was testing on the preparation of the revenue account for an insurance business, or basically for an insurance company. So that bring us now to the end of our class. We take a short break and then we come back after the break.
Welcome once more for our serial revision In our last session, we are still looking at November 2016. We had looked at question 1, the whole of it. Now we are moving to question 2, part A, highlight 4 applications of Markov analysis in business. Now, what do I mean by Markov analysis? This is a technique, quantitative technique that is used to analyze the behavior of a variable with the aim of predicting its behavior in the near future based on the current behavior. Therefore, if I want to look at the business application for Markov, I can list them so that in Markov analysis, there is basically changes. Either it's a loss from one side to another, or a gain, or there is retention. Therefore, when it comes that one, we can talk about applications of Markov analysis in business. Question 2A. Applications of Markov analysis in business. 1, it can be used as model for manpower planning. Model for manpower planning. Now let me say this. In an employment, there are 3 scenarios. There are those who come in, there are those who retain for or are staying for some time, then those who exit. Now, if we talk about entry and the management wants to maintain a specific labor force or the size of labor force, now they can determine how many are indeed exiting or leaving the organization due to 1, retirement, 2, resignation, or 3, sometimes dismissal. And to maintain such a number, what is the position? How much should be hired per time in the context for those that are leaving? That's why we talk about model for planning of manpower. Number 2, we can use the Markov analysis as a tool for marketing What do we mean as a tool for marketing? Markov analysis can give the marketing researcher the frequency or the probability or the possibility of customers changing taste, which means shifting away from this current product to another, or the probability of a customer being retained or staying loyal to that particular product. So if the marketer has the information or the possibility of shifting, then where shifting means this scenario, loss, gain, or retention, then he can now use that one to see how much he can aggressively engage in the market to see that whatever their product is under control and they attract more or maintain their market share. That is on the use of Markov analysis as a tool for marketing. Number 3, we can use Markov analysis for study of credit flows in banks. Study for credit flows in banks. What does it mean? You know, bank normally has facility in terms of loans. Therefore, those loans will have different status. The loans that are payable, the loans that are defaulted, which later become even bad loans. So the flow of the payment or servicing of those loans can give the banks ability to study how they are in business in terms of those who are promptly paying their loans, in terms of the likelihood of defaulters coming bad debt. Therefore, Markov analysis helps a lot. Now, we still have, there are many others, we can still mention this, to study behavior of stock prices in a market economy. You know, we have what we call a stock exchange or security exchange. Generally, we talk about stock. The stocks are actually sometimes most shares and the rest. How do they fluctuate? How do they rise? How do they fall? How do they become steady? So those ups and downs, with the knowledge of Markov analysis, we can always apply it. There are many, even if you talk about maybe in terms of consumption, what is the need for consumers? How frequent are they? Which is still some part of marketing. So we can apply Markov analysis in various parts. So that is the solution to question 2A. That is solution to question 2A. We are highlighting where we have that Markov analysis. Question 2B. Fidica College offers 3 courses, namely accounting, information technology, and statistics. The marketing department of the college conducted a survey on 500 students to determine the number of students enrolled for each of the 3 courses. The result of the survey was as follows. 1. 329 students were enrolled in accounting. 2. 186 students were enrolled in information technology. 3. 295 students were enrolled for statistics. 4. 83 students were enrolled for accounting and information technology. 5. 270 students were enrolled for accounting and statistics, and 63 students were enrolled in statistics and information technology. Required. Illustrate the above information Venn diagram, 4 marks, Roman 1. Roman 2, the probability that a student is enrolled for all the 3 courses, 1 mark. The probability that a student is enrolled for accounting or statistics but is not enrolled for information technology, 1 mark. Here, this question is testing on set theory, and a set by all means refers to the collection of well-defined distinct objects. These objects are in terms of what we call attributes. These attributes are the courses, namely accounting, information technology, and then statistics. Normally, we use the Venn diagram to represent information, and also we use capital letters to represent sets. These are now 3 sets, and I would now say that question 2B, and we say that sets are represented by capital letters, so I can say let this set A, the set of accounting groups, students, let IT, or just use T to represent information, technology, students, and S to represent statistics students. So when I've done that, the next thing is to use the Venn diagram. As I said, when you are dealing with the Venn diagram, first and foremost, you ask yourself the information provided, if at all there is intersection in all the 3 sets. According to this information, we don't have any number that is enrolled for all the 3 subjects or courses. One, we are informed that there are 500 students. That forms what we call universal set, and therefore, given the number in the universal set is 500, let X represent number of students taking all the 3 courses. So this is my Venn diagram. I draw it here, and we normally use rectangle to represent the universal set. I have the set in question drawn using circles. Call that accounting, IT, and statistics. That part is now represented, and the universal set there are 500 students. I go bit by bit, starting from the innermost part, which is all the 3. Then I move exactly to, exactly to, exactly to. What am I provided the information? 83 students enrolled in accounting and information technology. Accounting and information technology. Remember, it has not stated 83 students enrolled in accounting and information technology only. Therefore, that 83 involves this part, and therefore this part remains 83 minus X. Next, 217 students enrolled in accounting and statistics. That 217 involves this, therefore this part only is 217 minus X. Then 63 enrolled for statistics and information technology. Statistics, that is going to include that one, so 63 minus X. I have gone through from all the 3, exactly 2, exactly 2, exactly 2. Next, exactly accounting only, exactly information technology only, exactly statistics only. Since we are not told those who are not enrolled, these students are going to do some course, this part should be taken as 0, no information taken as there is existence. So I can get the number which is for accounting only to be going to be accounting as a whole was 329 minus, so that I enter it here, 83 minus X plus 217 minus X plus X. That should give me a value to simplify, because inside here I'll have 329 minus, I work them separately as rough work, and then I get 83 plus 217, that will be 300 minus X plus X0 minus X. So a minus and a minus, this will give me 29 plus X. This value, I bring it here and write 29 plus X. After writing 29 plus X, I can now move to the next space, which is this one and that, and I can wrap this one because I've made the entry in what is required for my Venn diagram. Next, I come to T, which is IT only. And what is IT only? 186 for information, so this one only will be the number for T only will be equal to 186 minus 83 minus x plus x plus 63 minus x, and I simplify that part to get it as 186 minus, that is 63 plus 83, 146 minus x. So 186 minus 146, this gives me 40 plus x. This part becomes 40 plus x. And last, I come to statistics. How many were in statistics? I come here and read 295 were enrolled in statistics. Since I failed for IT, I can go to get the one for the statistics only. So the number for statistics only will be that 295 minus 217 minus x plus 63 minus x, which should give me 295 minus this part 2617 plus 63, 280 minus x, because minus x plus x 0. So 295 minus 280, that should be 15 plus x. So here is 15 plus x. And therefore, my required Venn diagram is now as shown in this diagram. And that is what we need for that Roman 1. Illustrate the above information on in a Venn diagram. That is what we need. And that is earning you 4 marks. Roman 2, the probability that a student is enrolled for all the 3 subjects. Now here, we must get the numerical value of what is those that are taking all the 3 courses or subjects. So this is what we do. The whole number of students, 500. So we say, since total number of students is 500, comma, then this is what we have, 29 plus x plus 40 plus x plus 15 plus x plus x plus 83 minus x plus 217 minus x plus 63 minus x. 1, 2, 3, 4, 5, 6, 7. This must be equal to 500. And then I solve for my x. And after solving for my x, what do I get? This is 4x minus 3x, 29 plus 40 plus 15 plus 83 plus 217 plus 63. This is 447. And if it is 447, once more 29, I cross check, plus 83 plus 40 plus 217 plus 63 plus 15. 447 should give me 500. So x is the 500 minus 447, which is 53. So in this case, probability of student selecting or the question is student enrolled in all three equals 53 over 500, which we can divide and get the value 0.106. 0.106. Then the next one is the probability that a student is enrolled for accounting or statistics, but not enrolled for information technology. Accounting or statistics, but not enrolled for information technology. Accounting or statistics is with this part, and that part. So this one, the number enrolled for accounting or statistics, but not IT equals what we have here excluding IT, 29 plus X plus 217 minus X plus 15 plus X, which is 29 plus 53 plus 217, 53 plus 15 plus 53. This one cancels. So what do I get? That number before I get probability. So this is 29 plus 53 plus 217 minus 53 plus 15 plus 53, which is 314. So probability equals 314 over 500. That is what we have, 0.625. Let me write it well. So probability of a student enrolled in A or S, but not T, is 314 over 500, which is 0.628. And that is solution to question 2A, question 2B. And question 2C, we are not going to look into it. So thank you. And that is the solution for that question 2 for selected part. Thank you very much.
Greetings you all and welcome to the study of business and data analytics. Business and data analytics is a newly introduced paper in the CPA syllabus. In our today's lesson, I'm going to do an adumbration of the CRISP DM framework. The CRISP DM framework. Now, learners, the CRISP DM framework is a model that serves as a base for a data science process or project. And CRISP stands for cross, CR stands for cross industry, cross This is cross industry standard. S stands for standard. All right. CR stands for cross. I stands for industry. S, this S stands for standard. All right. P stands for process. DM stands for data mining. For data mining. Cross industry standard process for data mining. It is a process for data mining. So what is data mining? Data mining is the process of extracting and discovering patterns in large data sets. Data mining is the process of extracting and discovering data patterns in large data sets. All right. So, candidates, the CRISP DM framework, I've said, is a cross-industry standard process for data mining, which is a model that serves as a base for data science. Data science. What is data science? Data science. Now, data science is the field of study that combines domain expertise, programming skills, and knowledge of mathematics and statistics to extract meaningful insights in data, meaningful insights from data. In other words, data science is a process of finding anomalies, finding patterns, finding correlations within larger data sets to predict outcomes. And using a broad range of techniques, you can use such information to increase revenues, to cut costs, to improve customer relationships, to reduce risks, and so on. Data science. And one may ask, what's the distinction between data science and data analytics? Because remember, our subject is data analytics. What's the difference between data science and data analytics? Now, candidates, while data science focuses on finding meaningful correlations between large data sets, data analytics, on the other hand, is designed to uncover the specifics of the extracted insights. In other words, data analytics is a branch of data science that focuses on more specific answers to the questions that data science brings forth. So, data analytics is a branch of data science. It's a branch. There are many branches of data science. So data analytics is one of the branches. So learners, in this lesson, I'm just doing an adumbration of the CRISP-DM framework, the cross-industry standard process for data mining. And I've defined data mining as the process of extracting and discovering patterns in large data sets. This CRISP industry standard process for data mining is a process model that serves as the base for a data science process. It's a process. It is what? It is a process. That means there are steps or stages or sequences or phases in the process we are calling cross-industry standard process. Cross-industry standard process. It is a process. And within this process we have sequential phases. Sequential phases in the cross-industry standard process. There are sequential phases. And these are the sequential phases, the phases or the steps, all right? The phases or the steps. It has various steps which include one is business understanding. Business understanding. The second phase is known as data understanding. The third phase is known as the data preparation. Data preparation. Number 4, modeling. Modeling. Number 5, evaluation. Evaluation. And lastly, deployment. Deployment. These are the phases in the